Okay, so let's get started. I want to believe that other people are going to join us. Guys, one thing I can tell you is well, for people who haven't met me before, who don't know me, I have some years of experience trading in the financial market generally. And I excuse me. So yeah, I have a few years of experience trading the forex market. And I'm basically a technical trader, but I'm always interested in seeing, how people can win within the forex space because I believe so much in the forex space. I've made money from the forex market and I've also lost money. Okay. I've made money, I've lost money. Most of my losses were prevalent in my early days. So for some of us we learned with all the wrong um we learned, you know, without proper mentoring. We learned forex trading without proper mentoring. So we the l- knowledge and skill we have today, you know, we learned them through our own pains. So our own pains taught us this lesson. Why am I telling you this? So that we can appreciate the place of having, someone to hold you by the hand and help you navigate the forex space, especially if you are a newcomer to this industry or to this trading thing. Okay, so let's just go on and get started. Quick one for those of us who were now. Let me see. I hope you guys can see my screen. Okay. Confirm if you can see my screen. If my screen is if you can see my screen, just put it put it in the chat box if you can see my screen because I'm sharing my screen right now and I expect that everyone should be seeing it. Okay, good. Thank you, Esther, for that feedback. Okay, so yeah. So why did I picked interest in Jivu out of curiosity? I mean, um when I heard about Jivu, but by the time it was explained to me, it looked very familiar and very similar to another forex company that we have engaged with in the past. So for me, I became just basically curious to see what's different. So that's why I subscribed. At the time I was subscribing, I wasn't so sure. You know, I just wanted to see is there something in this G food, for me and for other people around me. Okay, so I took my time checking one scanner to another. I checked through the educational package to see do they have quality there. I checked all the educators. I saw some familiar faces there and names there. I also, and then I took my time to examine all the scanners, okay, to see which one, you know, is most effective, which one is the most effective amongst them. Now, why that question of which one is the most effective will be very relative, but what I can tell you is that what I'm about to share with you today has shown some high degree of consistency during the so so I have used Jivu. I used it for a whole 1 month without even trading, using it for live trading. I used it for a whole 1 month without I was studying it for my first 1 month in Jifu. What I'm doing is studying Jifu, studying this app, what do you call it? Studying these scanners to see if they are dependable and reliable. And at the end, I think the conclusion of my study is that Jivu has something very, very um reliable here. They have something that's going to help a lot of people to make money if we are very disciplined, if we are not greedy, if we approach this system like with an investor's mind. Okay, I'll in the course of my training this today, I'm gonna tell you the difference between trading as an investor and trading as a trader. Okay, trading as an investor and trading like a trader, and okay, so I mean, those there are some nomenclature, stuff in there, but there are some meaning behind what I just said. Trading as an investor and trading as let me say, a retailer. Okay, so that it can be clear, because an investor is a trader, and also, so trading as an investor, trading as a retailer. So two word of difference in there. Okay, so quick thing about Sniper Pro. So Sniper Pro, as you already know, if you are familiar with the scanner already. Sorry, hold on, let me make sys. So again, when I'm addressing Madam Buki, you may hear me calling her sis. That's because that's who she is to me. So okay, so guys, so this is Sniper Pro. For those of us, once you log into your Jivo account and you come into the scanner account, this is Sniper Pro. Okay, for people who are not familiar with it, it has all the instruments that you can trade at the top here. This is your time zone. Okay, you have your time zone here. Okay, so I'm presently 7 hours behind you guys. So ideally I should be minus 7 Vancouver. That should be my time. So don't forget, we said that when we are in the meeting, we always come in mute. We only unmute when we want to ask questions or talk, um, address the class. Okay, so but for the purpose of this class, maybe we just maintain the time. You guys should be like, okay, this is +1 Lagos. So we choose +1 Lagos for the purpose of this class. Okay, so then, yeah, the time frames are also there. So most of our trading will be done on 15 minutes or 5 minutes. Okay, 15 or 5 minutes, those are our entry time frames. But then, so we leave it out on 15 minutes for that purpose. Then, of course, these are the trades that are out there and the currency instrument that are tradable. Okay, under commodities, under index, currencies, and crypto. Okay, so let me start with crypto. So once you select the coin and the instrument you want to trade, by the way, once you go into the trader view interface, you can also change your currencies there. I'm going to show you that. So the first thing I will do is to expand it so that I can have a bigger interface. Okay, don't forget, I'm going all the way back because I assume that we have some very new business, so that we understand. So if I'm on this interface, if I want to change my currency, I don't have to go back to that home page, that dashboard. I just come here and change it to any currency I want to change it to, something like this, and then it's going to change without affecting, So, guys, this is it. Okay, so what do you see on this canal? You will see the trade counter at the top here. Here's the trade counter. You will see the Bollinger Bands and the EMAs, the EMAs. Okay, that's what you're seeing there. You will see key levels on the right, where you have these red lines R1, 2, 3 to 4, then S1, 2, 3 to 4. Those are support and resistance levels. Okay, then you will see the indicate and the oscillator window. This is the oscillator window, and I think this is a stochastic. Yeah, I think this is stochastic. Now, so the features of this Bollinger Band, you see that we have this red solid what do you call this now? This red solid flag, okay, and then the blue solid flag. Under the red solid flag, you can see a red line. Above the blue solid flag, you can see a blue line. Now, so these are the Bollinger Bands, okay? We call them the Bollinger Bands, the upper one and the lower one. The upper one is red, the lower one is blue, okay? In the middle, you will see the median. We call this the median of the Bollinger Band, okay? Mostly the median is a moving average, okay? Then you have this like, I think this is a 200 moving average. This purple line is a 200 moving average EMA. So it's important, it's significant because it's a trend indicator. Okay, it's a trend indicator, always indicating where the trend is going. So it's very important to pay attention to it. Then what else do you find? Do you find some other EMAs? I think we have a 10 moving average in the that runs in the candle. You can see it here, turning blue and red as it's moving in the candle. Then I don't know, maybe this is a 50, yeah, a 50 moving average, this red one. Okay, but in all of this, okay, what is important to us is going to be the Bollinger Band. Okay, sorry, before I move on, the features of the oscillators. We have for the oscillator, we have this blue, the red solid line like this, which is called the bearish reversers. The blue one is called the bullish reversers. Then we have the oversold, overbought level, which is bearish retest, and the oversold level, which is bullish retest. Okay, so the oversold level is blue, the overbought level is red. Okay, oh, within the oscillators. Now, what's important to us as traders here is going to be what's happening between this solid red tape and this red line, which I call the inner band and the outer band, and then the same thing for a sell. Then for a buy, we are interested in what's happening in this blue flag and the blue line, the inner band. Okay, so we are interested in what's happening, in these two areas. So that's one. Then number two, we are also interested in what's happening at the retest level of the oscillators. So what's happening at the bearish retest, what's happening at the bullish retest. Those are our area of interest, okay? But in addition to those, our counter is going to be our most reliable, our most important, condition, our most important confirmation for any trade you want to take. So it's important you understand this very well. Okay, so sis, is it okay if I go over the main
Initial conditions. Yes, please
before
go
we
over.
come
Let's go.
before
Yes,
we
let's go
continue with
through it
Divergence?
briefly. For the
Okay,
sake of one or two people that went in the first class, let's just run over it quickly.
okay.
Yeah. Thank
So
you.
so guys, now trading with this Sniper Pro, I've been trading with it. It's been crazy consistent. Crazy consistent, and that I've been sharing some of the trades I've been taking with C's. I think I picked it. Let me show you some of this trade. Yeah, this is the trade I picked this morning, USD JPY buy, and you can see that it has delivered. It has delivered. We're going to talk about that, and I think some couple of trade yesterday too. This this was yesterday. GU. All Most of this trade, this was gold, which was how many days ago was this? This was 3 days ago, 20th. You can see that all the trades I've taken have delivered. Because I screenshot that this was gold also the same day. All of them delivered. Good, all of them eating profit, okay? So what do we what what do I look out for? What do I look out for when I come to my Sniper Pro? The first thing I look out for is what is my trend counter saying. On this trend counter, you will see the following. Um, on this trend counter, you're going to see this bullish, these three major levels. This is the trend level. This one shows you is the trend bullish or bearish. So you will see it here. Now, the second level is telling you what's happening with the trend. Is it, I mean, with the market, is it trending? Is market trending? Is it consolidating or is it pulling back? Okay, in real time, it's telling you that. So that's one. That's true rather as about these counters. Then the third level is telling you this trend, which is bullish, is it very strong? Is it strong? Is it neutral? Is it weak? Is it very weak? So, what are the scenarios that you find? You will find a scenario where when market is bullish, if it tells you it's trending like this and it's very strong, then you should be only looking for opportunity to buy. Look for opportunity to buy. When market is like this, when your trend counter is like this, please don't sell. Samuel, can you mute, please? So when market is showing bullish trending very strong, don't sell. If you are selling, you are trading against the trend and it can come to, it can come to bite you later. So we can have a situation where it tells you that market is consolidating. When market is consolidating, don't trade. Because consolidation suggests that there may not be enough volume in the market. Now, when market is pulling back, it only means, like we know, a pullback is occurring. That means if the trend is still bullish, but it may come and show you pulling back. Now, when market is pulling back, you can trade a pullback. So if it's bullish and it shows you pulling back, you can trade a pulling back, meaning that you'll be looking for opportunity to sell in a bullish market, but you cannot stay in that trade for so long. So you have to know, be careful with your exit strategy. When you get out of the trade becomes very important. Okay. Now, when a market is bullish, trending, and very strong, you know that it's buying, right? By the time it's moving to very strong, it's still buying okay. By the time it's moving to neutral, that means that something is happening. That means the buyers are losing their strength in the market and volume is shifting to the sellers. That may happen when market is pulling back. So when most of the time when market is pulling back, this strength indicator we start shifting from from very strong to neutral to, in most time you find it in very weak. When it is very weak and pulling back, is a time for you to trade a pullback. When it is pulling back, market, meaning that market can be bullish. This one will show bullish, but this will show pullback and very weak. Then that is a good time to trade a pullback. Why the market is still, the trend is still bullish. So when it is pulling back and the strength indicator begin to move from very weak to neutral, that means the trend is about to pick up again and continue. Okay, so I'm just trying to explain the trade counter very well so that we can understand it. So again, let's go over it again. First thing you see is bullish. Second thing you will see, and that's the first level of the counter. Bullish is here. It will either tell you whether it's bullish or bearish. That's the only thing you will see. Second level, it will tell you whether the market is trending or it is consolidating or pulling back. So the only time you trade is when it is trending or when it is pulling back. When it is consolidating, don't trade. So when do you trade? When it is trending. When it is trending and it is very strong or strong. When it is very strong. Okay. What time do you trade when it is pulling back? When it is on bullish, pulling back, and very weak. Market is pulling back. You can trade the pullback, but don't forget, because the trend is still bullish, you cannot stay in that trade for so long. So let me quickly show you those scenarios. Like, market is bullish now. This BTC market is bullish all the way here. All the way here, guys. If you look at it, so market has been bullish, right? Okay. So this is bullish. When price was dropping here, this counter would have remained bullish. The trend will be bullish, but the what do you call it? This is where I'm talking about now. When price was dropping here, this counter would have been bullish. This place would be pulling back and it will show very weak. So yes, it's the time to trade this trade if it meets our condition. But guess what? We will not stay in this trade for so long. We will reduce our target levels. Okay, compared to, let's say, I entered the trade here, a buy, because market is bullish, trend is bullish, trend is and it is trending and very strong. I will remain in the market. I will not get out of this trade. When it was going up like this, I will stay in it. When it was coming in this, I will still hold my buy. Why? Because the trend is bullish. I know it will continue to go up. This one is just a pull back. So when this one was happening here, it was showing pullback very weak. So when I see pullback very weak, I see opportunity to enter a sell here, I will enter that sell. But like I said, I will not hold on to the trade for so long. But when it is trending, I will hold on to the buy. So when the market came here for a buy, and let's say I entered the trade, and I will still hold on to it because the counter is showing me bullish, trending very strong. I will hold on to it. So what I'm just trying to tell you is that when it is bullish, when your trend is bullish, you can stay in the trade longer in the direction of your trend. That way you can maximize your profit. But when it is not, it is bullish, trend is bullish and it's pulling back, even if I'm going to trade the pullback, I won't stay in it for so long. Now, do we have any question with the counter? Is it clear?
Yes,
Okay.
it is.
Okay, let's move on, guys. Let's move on. So now that we understand the counter, let's now look at under what condition do we pick trades? What do we wait to see in the market before we trade? So this is BTC USD, for example. Oops, what did I just do? Okay. So this is BTC USD. What are the conditions for trading Sniper Pro? Number one, your counter, which I've explained to you. The first thing I want to see is, and like I told you during the last training, I said one of the beautiful things about Sniper Pro, it allows you to do top-down analysis, which is very important in trading. Helps you to see the market outlook from the higher time frame. So when you are doing this, you are not gambling. This is not gambling. It helps you to trade technically. So for example, since we are trading on 15 and 5 minutes, at least we should start our analysis from daily. Okay, minimum daily. I have to come, and what am I looking at? It's not a complex thing. I just want to see what is my counter saying on daily. Is my counter on daily, what is it telling me? It's telling me that the market is bullish. So the long time of Bitcoin is BTC USD is bullish and is trending and is very strong on daily. So when I am selling Bitcoin on 5 and 15 minutes, it will be unreasonable for me to be trading it to pick a sell in it and now sit down in it and say, oh, my market is selling now. When daily is telling me that the bulls are still strong, the buys is still very strong. I don't want to trade against the trend on the higher time frame. So if I'm trading, I know that's why I keep emphasizing it. I know it's a pullback and I know I need to get out before I get trapped in the trend. Now I come to 4 hours. What's 4 hours saying about Bitcoin? Bullish, trending very strong. 1 hour, bullish, trending very strong. 30 minutes, bullish, very anybody that is selling Bitcoin needs to be careful. Then we now come to 15 minutes. 15 minutes telling us the same story. 5 minutes. 5 minutes, good. So 5 minutes are giving us a good scenario for me to explain some of these things I'm saying. So look at this. Market is bullish, but it's on 5 minutes pulling back. And then it's showing us that the strength of this bull has moved from very strong to strong. So if it continues to sell, it probably will move to neutral, weak, and very weak. So by that at this level, the strength level will shift in favor of the pullback. by the time it shifts to very weak. So that's the first thing I'm looking at. So I do a top-down analysis from daily when I enter that market and see what is happening here. So in which direction was our primary trade sentiment, our some primary sentiment for Bitcoin USD for us as far as this trading is concerned today is buy. I want to look for opportunity for a buy. But if I see opportunity for a sell, will I take it? Yes, if it meets my condition. So like now on 5 minutes, he's saying sell. But note, guys, 5 minutes is a lower time frame. The price is activity is very noisy on the five lower time frame. By the time you go to 1 hour, you see what 1 hour is telling you. Can you see what I'm saying? It's now pulling back very weak, but it is just 1 minute time frame. In the next minute, it can change because it's 1 minute. It can change, but it's good that it's giving us, a micro view of what is happening in the market at this particular point in time. So for this lower time frame, 1 minute, 5 minutes, and 15 minutes are important just for us to enter the trade. That let me emphasize that they are important just for you to get, enter the trade. But when it comes to your main analysis, start from the higher time frame. So 5 minutes, good, is just for you to see where can I get into this trade. So don't use the lower time frame, especially 1 minute and 5 minutes, as the basis for your analysis, as it were. So start from the higher time frame. Like I was in the live call that was done earlier this morning in American time here. I don't know the name of the guy who did it. I think Mastermind something. They called a trade, and when they called that trade, I came to Sniper Pro. I came to see it, and the moment I saw it, I saw that we are going to lose this trade. So I took it on my demo account just to see. But the moment I saw it on Sniper Pro, I said we are going to lose this trade, and we did lose that trade. I think it's AUD USD or something. So why? Because Sniper Pro helps us with all this. This trend counter thing is powerful once you just understand it, and it's very simple, like I explained to you. It's just for you to check from a higher time frame. What's my higher time frame saying? What's daily saying? What's 4 hours saying? What's 1 hour saying? Are they saying the same thing? If they are saying the same thing, there is I will favor buy. If they are all telling me bullish, I will favor buy. Okay, more than I will favor sell. I think that's what this Sniper Pro does for me. It helps me settle my mind and have a sentiment in the market. So I'm not jumping into every trade. Oh, I sell, I will sell. Buy, I will buy. It helps me clear my mind. So I'm in USD JPY. What's my primary trade is a sell. Okay, but if I see a pullback and and all my conditions are there, will I sell it? Will I buy it? Yes, I will buy it. So what are the other conditions? So the first condition is the counter. You have to look at what the counter is saying. Is the counter telling me to sell or to buy? So in this scenario on 1 minute now, for example, on 1 minute, the counter, you remember when I came to 1 minute, it was showing very weak, but now it's showing weak, meaning that what do you call it? You see, it has gone to very weak again. So that's why I said 1 minute is not a reliable thing. It's just for you to maybe enter your trade possibly. So coming to 5 minutes, what is it telling me? Let's assume I want to pick a trade on the, with what do you call it? I want to pick a trade. I look at what is it telling me. It's telling me a pullback. So when it's telling me a pullback, that means it's telling me look for opportunity for a sell. But then I have to look, what's the condition of the trend? Is it still very strong? So it's telling me pull back, okay, but the trend is still showing very strong. So for me, I can there's no trade there for me. Okay, there is no trade. I can't sell here. I cannot sell here because it's saying pull. We're in a bullish market. Market is pulling back, but the strength of the trend is already showing that the buyers are becoming strong in the market, and you can see that price is also going up. I mean, the candlestick is buying, so I have to wait. Ruth, can you please mute?
Let me remove that person.
Let's always mute, please. Very important. So that's the number one thing I want to look for. Is the trend telling me to buy or to sell? Okay. So number two thing is I want to see the price activity around the Bollinger Band. So the first thing I want to see, okay, is and let's look at this scenario. I'm going to 15 minutes and let's quickly look at some of this scenario. So in this scenario, okay, when price, and another thing I need to let you know that is good about this Sniper Pro is the fact that these indicators, for the first time, I'm seeing indicators that are really working in real time. They are not lagging like as it were, real time, and I appreciate that. So, and I think that's what makes it very effective. Okay, now look at this. So I check, has my price touched either this inner Bollinger Band, that's the blue line here, or the solid flag of this blue one, this blue solid flag. So if it has touched any of these two, I'm interested. So here, it did not only touch the blue line, it came into the blue flag, the solid blue flag. So number two, the oscillator, has it touched the bullish retest? Yes. If it has touched it, I'm interested. I hope you are noting it. Number three, Abi, is it 3 or 4 now? Have I seen a blue dot or a blue circle, whichever one you want to call it, appear in my oscillator? If the answer is yes, that's number three condition. I'm interested. So number one, has it touched here? Number two, has it touched this bullish retest? Okay. Number three, has a dotted ball, has a dot appeared? So once this dot has appeared, it has touched here because and then it has touched the Bollinger Band. I'm ready to shoot the trade. The only thing I just need to check is my counter. Is my counter agreeing with me? So for this trade now, number one, let me tell you what is in this scenario, what was happening at that time. At that time, market was bullish, but a market was bullish, okay? It was pulling back, it will show you pull back, it will be in pullback. And then while it was selling here, it would be on very weak. So by the time it got here, the strength is moving from very weak to neutral. By the time you see it has moved from very weak, it's moving from weak, it will move to neutral. That means that this buy is good to go because the strength is going back to very strong. So before you know it, it will move from pullback to trending, and then the strength will show. So by the time it's moving like this, all this counter will change from pullback very
There's
weak
mango.
to bullish, trending, very strong.
Train, I'm sure, Mama.
Okay.
Oh, sorry.
So those our I think Aunt Buki, okay, she's muted now. So though that's our condition. Number one, has it touched here? Number two, has it touched here? Number three, has there as a dot or a ball appeared? If that is yes, good. Number four, I check my counter. Is my counter telling me to buy? I mean, is my counter saying it's good to buy? Have I seen a shift in the strength in my favor? So a shift in the strength in my favor is means that it is moving from very weak to neutral to strong. So when when that move you begin to see that movement, then this is a good buy. Okay. So it is either it is there like that, or it is bullish, trending, and very strong. In fact, if it is bullish, trending, and very strong, good one. You don't. That's the best place you want to see it while you are buying. That's number four. Number five condition. That's why I say this thing is solid. Now, number five condition. Let's come to the real time. It will always show you. You will always see volume at the top. You can see the volume. So the volume will always tell you whether the volume is on the buyer or on the sellers. Okay, it will always show you. Okay, that's very important. So if you see the volume is of the sellers are more than the buyers, it means, or you are seeing a shift. You know, maybe before this one the sellers have 78, the buyers were 40 something. Then you begin to see a shift. Seller begins to reduce, buyer begin to increase. That's indicating that there is a shift in the market. The volume is shifting to the buyers. That would be a good opportunity for you to buy. That's then number six.
Yes.
Number six condition, things you will see in this market that for you to enter the trade is also you will see some point system. But right now it's not showing the point system. When a trade is good to go, it will show you that point system. It will show you that point. Okay, whether it is 3 point, 4 point. So that point is telling you the number of confirmation that that trade has for you to either sell it or buy it. Okay, let me see the trade, some of the trade I took if the points are there. Okay, so it's not all the time the point will come out, but in some a lot. So those points I'm talking about. Oh, we need those points I'm talking about usually show up around the time you are picking your trade and things like that. So it's not like something that comes out and it will stay there. It is only when conditions are met that it usually flash. They will just flash, they will show. So the higher the point you have, the higher the probability of your trade going in your favor. So when you begin to have anything at 4 point, 5 point, 6 point, 7 point, pum, just enter that trade. It has a high probability that you are going to end up in profit. Okay, so that is that. We are gonna look at possible. Let's see if we have a opportunity for us to let me look at gold. Let's look at gold. Let's see what's happening with gold. Let's see if we have anything there for us. Let's see if we have anything there for us. Okay. Okay, so guys, so now look at this with gold. This was a good trade on gold. That should be earlier today. it touched. Number one condition met. Number two condition met. The dots showed up. Good. I got in on this trade. Gold sell. Guys, in fact, I sold it. Let me tell you what happened. I did not, it was USD JPY I saw. The moment I saw USD JPY I was buying, I just entered the gold. I now came back and I saw that, oh, it has even met, it has also given me a good condition for itself. And the time when I sold, okay, market was bullish. It was pulling back like this and it was very weak. It was showing very weak. So I just sold it. Okay. So let's look at the condition that played out. Number one, it hit the upper Bollinger Band. Number two, it hit the bearish retest of the oscillator. Number three, the dotted line showed up. Okay. Number four, the volume as at that time, it has shifted now, but the volume was in my favor. The volume was in my favor. It was shifting to the sellers, and then my trend was also showing very weak. So I didn't get the point. It didn't at that time. It didn't bring the point. So if you don't see the point, you don't have to. As long as 1, 2, 3, 4 of your conditions have met, it has touched there. It has touched there. The ball has shown, and your red counter is saying sell. Your trend counter is saying sell. Please go ahead and sell. Whether the point comes, if the point is just like, for me, like I said during the last training, it's like secondary condition, additional condition to further reinforce your what do you call it, your probability on the trade. So this was what played out why I sold good in the morning. But if you look at what is happening right now, is still telling us we are in a pullback. Okay, but nothing, we have not seen anything else happening. Okay. Now, so I took this sell in the morning, and then I took this buy on 5 minutes. I took this buy on 5 minutes, but then I think I lost it. And not because it did not take profit. I mean, it was not in profit. In fact, it was in profit, but I did not break even on it. And then it eventually came and hit my stop loss. I took it on 5 minutes. Okay, again, look at it. When I took it on 5 minutes, price got to the blue Bollinger Band. It touched the oscillator. It gave me the dotted ball. Okay, it gave me the dotted ball, and I was like, wow, good. This is another good. And I took this trade by also today. I put my stop loss, which is usually below the low of the entry, and then of course the take profit. Now, this is me making a confession to you. I put my take profit on here, R3. That's where I put my take profit, R3. Good risk reward ratio, good everything. And then it went into profit. I was not checking my phone. Okay, but I did not break even. So it went up, it was in profit. By the time I checked, I just saw that it has taken me out on stop loss. So it went in profit, but unfortunately, it hit a stop loss. So that was a good trade for me that I lost, unfortunately. Now, let's look at this scenario. Based on what I've explained to you so far, look at here. Price touch here. Let's assume that at the time price touched here, the counter is telling you to buy as well. Are we going to buy? The counter
No.
say buy. Price has touched here. It's meaning buy, right? Then let's come here. Are we going to buy?
No, because it's not touching the bullish retest.
Good. We are not buying because we are not buying because he did not touch our
Bullish retest.
bullish
And
retest.
there was no ball. There was
And there
no
was
ball.
no thank you. There was no ball, there was no dot, so we are not buying, even though market seem to be buying. But based on the other strategy I wanted, C says we should talk about today, which I will go into shortly. We would have bought it. It's called divergence. The good thing about a sniper
Hello,
is that
sir. Hello, sir. Sorry, sir. I want to make an observation before you leave here, sir.
yeah,
The observation is on there is this particular round cycle that always appeared first before the ball. I think I don't know. It's something that we should take note of because
you
that's
mean
what.
this
Yes,
D?
exactly. It will
No,
always appear.
this D is telling you divergence.
Okay.
That's what I
Okay.
want to teach you today. I,
All
I'm
right.
just
Thank you.
I'm just trying to recap. Anytime you see
It's all
the
right.
D is divergent, it means that a divergence has happened. And that's why I was telling you that I would have taken it because there is a divergence there. Okay, but the good thing about Sniper Pro is that even if you're a newbie, it will always draw it for you. So you don't have to be drawing it yourself. Once you see a D, it's telling you that here there's a divergence, so buy. You see? Yeah, he draw it. There is a divergence here too. It wrote sell. I don't know if you can see it. Look at it. It has drawn the divergence for you. So it's not complex. You are not drawing it yourself. And see, did this sell? Did it
No.
sell? Look at the divergence. That when it showed you divergence here, if you had sold, would you have made profit?
So
It
Yes,
sold.
massive profits. He sold.
So that's the same thing that is happening here. He told you there's a divergence here, buy. So what do? You buy. And at least it has you will be in profit as at now. At least it has gone up by some pips. I don't know if you get my point.
We do get your point. My question is, does the divergence, once you see the D, it invalidates all the points, all the other conditions?
Okay, so this is what I will say. I will say you have to divergence is a different condition from the ones I've been explaining since. Okay, because like let's say there are two different strategies in the same scanner. Okay, so when it comes to divergence, you don't need what do you call it? You don't need it to touch oscillator before you buy or sell. Once you just see divergence, because if for those who know, well, for people who are experienced trader, you can see that there's a divergence here. What do you need? What are the conditions for a divergence? You see, for a buy, there are different divergence, okay? But this is an example. This is a low, and this is a lower low, right? On
Yeah.
the candlestick. On your oscillator, you now have a lower low, a low, then you have a higher low. That's divergence. So when you have a scenario like that, divergence is one of the most powerful what do you call it? Pattern. Is a trading pattern. You have price actions trading, you have pattern trading, you have all these different ones. So it's a pattern trading. So once you have a divergence, it's very strong. A lot of time divergence always play out. A lot of time. So, but the only thing I'm gonna say is this: is the volume in my favor? Yes. 64 to 33 as at now. So if the volume is in my favor, that may be a good opportunity to sell. And I'm sure at the time it called a buy for us, at the time Divergence called a buy for us, we must have seen our counter also should agree with it. Either it is on pullback, but it is shifting from weak to strong to very strong. If that's the case, the buy is good. But as we are talking right now, what's happening in the market right now is pulling back and it's very weak. And what can you see? You can see that the market is actually at the moment selling. But again, don't forget this is 5 minutes. Meaning that we see a lot of shift and changes quite regularly. Okay. So but there's divergence here. That's why we sold. I mean, that's why we should have bought here. Okay. So again, let's go over the first strategy, which is Bollinger Band. You know, let's call it Bollinger Band strategy or so. What do you want to see? Number one, as well, after you have done your top-down analysis, you know what's the direction of gold saying. Gold, okay, so let's come to gold. Daily, very strong. 4 hour, bullish, very strong. 1 hour, pulling back, but strong. So now, when this one is telling us 1 hour is pulling back, okay, and you can see that we are in a pullback, truly. And look at this 1 hour divergence. Please, if you had sold this, will you not make profit? Look at it. Let me show you again. On 1 hour, see divergence on it. See where it showed up, divergence, sell. If you had sold this, you will be money on gold right now. Sweet money. At least this is where price is right now. So at the time you were taking this trade, for example, this divergence, you know, funny enough, I did not even see this divergence on 1 hour earlier in the morning when I took the buy. When I took the sell, I took the sell because UJ showed me buy, and I know gold is a negative correlation. Gold is a negative correlation to USD JPY. So I knew that since USD JPY was buying, gold is probably going to be selling. So I went to my 5 minute and I saw this, and that's why I sold gold. I went to my 5 minute. Where is it? I went to my 5 minute. Was it 5 minutes? Yeah. Was it 5 minutes or 15 minutes? One of those. I think 15 minutes. So I came to my 15 minutes and I saw this opportunity to sell. I did not even know that 1 hour was also showing. In fact, if you see on 15 minutes was also telling us divergence. So that's good entry. And that's a good trade. So the good thing about Sniper Pro is that you can choose either to trade divergence. You can say, okay, all I'm looking for in Sniper Pro is divergence. Once I see divergence and my counter tells me to also is in agreement with the divergence, I'm going to take my trade. I'm going to enter the trade, and that's good. That would be a good one for you. So that's note that you can decide I'm just going to be trading divergence, or you can decide, okay, you know what, I'm just going to be trading my Bollinger Band. Wait for it to touch, wait for it to touch, see a ball, agree, check my counter trade. My counter trade is saying I should sell, and then I'm going to sell. So those are the 4 major conditions. Number one, let's go over it again. Number one, counter trade. Is it asking us to sell? Number two, as price now got to my Bollinger Band. Number three, as price got to my retest level. Number 4, have I seen the dot? Those are the 4 things you are looking for. If the answer is yes, 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 sir, and take your trade. If you don't get 4 yes, yes, yes on those 4, don't enter the trade. So what are the secondary conditions that will help you further apart from those 4?
The counter.
No, the volume is my
The volume indicator, the
The
percentage.
volume and the point system.
Yeah, volume and point system.
Volume
If
and the
the
point
volume is
system.
saying, yeah, like right now, see volume 86 for sell, buy 82. Should you be buying
No, you should be selling. Sellers are in control.
or in control? So that's it. Okay. So if point now comes and now show you 5 points, 6 points on sale, 4 points, 7 points on sale, then that makes it even better. You take it.
Awesome.
So you can see. So you can see that our pullback has moved from pullback strong to pullback weak. So meaning that selling is still what may looks more like it for us. So it's very simple. Someone say I don't understand divergence. Let's break it down. Okay, so simple. The divergence thing is not, there's no explanation about it. What you are looking for is this D. Let me remove this thing. I don't know if it's clear like this. You can see this D here. When there is a divergence in the market, it will always bring out this D. So this is sell divergence. Look at another divergence here. So divergence is not difficult at all. So forget the explanation and the technical explanation I was given, because you really don't need it as a newbie. But by the time you go to the academy, you will now learn it. But as far as taking trade is concerned, if all you just want to use Sniper Pro to trade and you want to be using divergence, all you are looking for is you are waiting for the time when the D will show up. So look at this example now. Divergence, it told us that it's divergence, yes. So you say buy. Now the good thing is this, is that when it comes to divergence on Sniper Pro, don't worry yourself whether it touches the oscillator or not. But the pattern you will see every time it shows you divergence is touching the Bollinger Band. Go and check it. Every time it's showing you that it's showing you there's divergence in the market, I think most of those times is touching the Bollinger Band. Let me see if we have any other divergence. Okay, let's check another currency. Every time it's showing you divergence in the market.
Check NAS 100, sir.
NAS.
100.
Okay. Where's Rwanda? Okay. Okay, see divergence on NAS. So it gave us divergence here. Did it sell? It didn't he sell? Good. Say another divergence now. Oh, this is good. So see a divergence on NAS. This is on 15 minutes. Has it bought? Yes. Okay. And it's giving us 7 points. Wow. This is fantastic. 7-point trade.
Wow.
This is a 7-point trade. Divergence. You don't need, so once you see the divergence, you don't need to, there's nothing to understand. Once I see divergence, oh, great. And it's telling me bullish trending. Why no go? volume 84, 86. I mean, sorry, volume 87 for the buyers, 86 for the sellers. What am I waiting for? 4 points. Bullish trending, even though I don't know. I think it moved from very strong to weak. Maybe that, yeah, I think that's it. But don't forget, like I said, this one is as per real time. So when I see this, when he gave us this entry, I'm sure that the strength of the bullish is probably strong or very strong. So what am I waiting for? I take this trade. NAS. Okay. Now, do every one of us understand the condition we need to see to enter this trade? Because the last thing I just need to do now is to tell us how to get out of the trade once you get in, because that's very important. Is there anyone who does not understand any of the true strategy we have talked about? I know that divergence is the simplest because you are not drawing anything. You are just looking for something. Is there a D? If there is a D, I will enter the trade. Look at this one. Let's look. Can anybody see divergence here?
Yes.
Can you see divergence? Did this sell or not? It sold. It sold very well. If you had got into this trade, you should have taken your profit. If you understand the true strategies on Sniper Pro that I shared with you, can you put 5 in the chat box? 5, I understand. Just put in 5 in the chat box.
I think this is the reason why you would have thought that this divergent that time you were dropping down that video. By now, people would have mastered it. I don't know why you were postponing that time. They don't postpone things like this. Thank you. You did well, my brother.
Okay. Anyway, it's never too late in the it's forex market, so there's nothing like it's too late. It's nothing like, you know, because there will always be opportunities in the market. So if you didn't make the money I mean, what you are talking about was just last week now. So if you didn't make the money last week, now that we have it, you can start making the money.
Exactly.
Mr. Abochi,
Yes.
am I right?
Yeah, good. You're right. You're right. Thank you. You are a genius. You really make me to love this the Sniper Pro the more. Honestly.
I love Sniper Pro, and
Honestly, the best.
and see, let me say this without prejudice to other scanner, but I owe you the duty to tell you what I also observe. Like
Okay.
I told Sis that one of the reason I would choose Sniper Pro above. Now, don't forget, it doesn't stop you from using what you already master. But why I would choose it above what do you call it? Trend wave, and trend wave is good, by the way. Let me emphasize that trend wave is good because it's making a lot of profit. I mean, a lot of people are making profit from using it. Is that it gives early entries. Early entry. Okay.
You mean Sniper Pro, right?
No, yes, Sniper Pro gives you early entry. Like
Exactly.
if Trendwave is calling a sell on, let's say, gold, and Sniper Pro is calling a sell on gold as well, Sniper Pro entry will come in earlier than trade than what is it?
Trend
Trend
waves.
Yeah.
Waves and twin waves
The
and
two of them
this thing.
we sell and make profit. But Sniper Pro entry will come in earlier for you, thereby helping you to maximize your trade.
Amazing. Wow.
No, just no test and test.
So but
Please mute yourselves. Hello. Hello. Can I ask everyone to please mute themselves, please? If you have a question, then unmute. Can we keep some orderliness in the house, please, guys? Thank you so much.
okay.
Thank you, AY. Thank you so much. You've given us so much value tonight.
Yeah.
This is totally mind-blowing. You've won me over. I used to be a kill shot person.
Okay, so
But from
sis,
today,
let me quickly mention this. We said this last week. Please, when the Bollinger Band is squeezing like this, it means don't trade. When it is squeezing like this, you see, it means don't trade. It will not give you a lot of, will you see trading opportunity there possible, but it will not give you opportunity to what do you call it? Trade cannot move because it's not trend, is consolidating. So it will not give you opportunity to maximize your profit. In fact, as a matter of fact, it will give you, there's tendency that you're going to lose some trade. Look at it's called a divergence here, but that divergence doesn't make sense. It's in a squeeze, it's in a consolidation. So when you see a divergence or you see your trade, what do you call it? You see your condition meeting up in a consolidation like this, in a squeeze like this. When the Bollinger Band contract like that, like this, especially in this scenario, okay, it is not giving room for you to really trade as it were. So my advice is, in this condition, don't trade. But when it is expanding, okay, then it is good. Or when it is showing you a trend, then it is good. You are good to go in that scenario. Is that clear?
amazing. That's very clear. Can you also kindly run us through the entry and exit points,
Exit.
please?
Okay, good. So the talking about the entry for the first strategy, of course, at what point do you enter the trade? Whether you are using 15 minutes as your entry time frame or 5 minutes, for the first trading strategy, you enter the trade at the point where this your dot shows up. Once your dot shows up, once it appears, enter at the close of that candle. During the last trading, so in this scenario, our entry for this trade will be here. Okay, you enter at the close of that candle. Now, where will your stop loss be? Make sure because your entry will always happen around a key level of the market. So in this case, it's a sell, right? So put it on the eye. The eye above that your entry, put your stop loss just above it. Just above it. Where will you put your take profit? Now, your take profit, let me show you. And by the way, I will tell you another thing about Sniper Pro, although I don't use it, but it's also there. Now, we cannot see this thing. Okay, but look at, if by the time, in real time, if this, we will be seeing this support and resistance. So you can use this support and resistance as your level of exiting the market. Because if you look at this market, it always comes to one of these. So in this scenario, for this trade, so your take profits can be here. Now, during my last training, I told you that you can take profit either in using the media line, if the media line is not too close to your entry, or you can use this blue Bollinger Band. Okay, you can use that one as your profit-taking levels, okay, which is okay. But later I found out that, okay, we can also use this support and resistance line because it has already drawn them for us. So I can use it here, or I can bring it here, or I can bring it here. Any of the three. I can use S1, S2, S3. And you can even use R2. You know, those are just support and resistance level. So you can use, depending, the most important thing you should use in deciding your take profit is your risk reward ratio. Now, everyone look at, I don't know if you can see my cursor. You can see risk reward ratio. Once, the first thing you should factor in is your stop loss. What is my stop loss? Once you see your stop loss, you now start dragging your take profit like this. Oh, I have this one ratio 1, meaning that I'm risking as much as I am targeting. So I always don't want to do anything less than 1:2 or 1:3. So once I have 1:3, I just say I'm fine. But if it's a trade in trend, as in line with trend, like I told you at the beginning, so I know that there's opportunity for price to go all the way, I hold the trade. So what I do is I add personally, based on your account, to enter like 2 to 3 trades. When when it is in line with the trend, don't forget, when it's in line with the trend, I take profit on 1:3. Once that profit has taken, I break even on the remaining trade that is running, and I leave it, to go in line with the trend. That's a good trading strategy. You can plan it that way, so you are trading along with the trend until you see a reversal in trend. That's when you get out of that trade. And I will show you what I mean. For example, this is let's see a market has been trading. Let's go to gold, for example. Let's quickly go to gold. Gold has been trending for some time now, guys. So let's say I come to 15 minutes, and guess what? For example, let's say I pick this trade when it was here, and price went boom, because I know it's in trend. Maybe I've taken profit on this buy. I even see opportunity to enter this sell. I enter it. So I have one trade running here. I put in 2 trades here. One has taken profit because is in trend. I leave the second one. I am buying, and then I see opportunity for a sell. I take the sell. That my buy is still running. I come here again and gives me opportunity to buy again because I know his market is bullish. What do? I close my sell, all my sells, because it's a pullback. I traded the pullback. I stay in for the trend. How do I know the trend? This one, bullish. And how do I know it's the trend? Because 1 hour, 4 hour, daily, weekly, they are saying that is the trend. I stay in it. So I have another 2 trades here, plus the one that is running before, making 3 trades. This one goes up again. I close one. Maybe I leave one running, because it's along with the trend. So imagine how much money I would have made. How many trades I have running? 1, 2. He comes here, I do the same thing. And because it is in the trend, that's maximizing profit, guys. Because it is in line with the trend. So the only time I close all my trade is when I am trading pullbacks. So when I see a pullback that meets up, I will take it, but I'll close all my trade. Okay. So what can you use to determine your exit, your entry? I've already told you your entry. You know when to enter. When all your condition meet, at the close of that candle, enter. But when do you exit? Okay. Exit. This example I gave you of this trade I took on 5 minutes in the morning, unfortunately, I lost that trade because I did not break even. So this let me use that example now. I enter here. My stop loss was below here. I was going, I put my, I think my take profit, I put it around R2, I think R2 or R3. That's where I put my take profit. So this was my exit. So I was using R1, R2 for my entry and exit, blah, blah, blah. Okay. So, but the other thing I could have used, okay, guys, is I could have used this media line and say my take profit one is media line. My second take profit is the inner Bollinger Band, which is this red one. Then my third take profit anywhere in the red flag. Okay, anywhere in this red flag, that can be my third take profit. But I later saw that we can actually use all this support and resistance level that's already been drawn for us. So so invariably, when you get in on a trade, you can say your first take profit will be S3. But look at your risk reward ratio. Is this what I want? S3 will give me, for example, S3 will give me 1:1. I want more than that. S2 will increase it. S1 will give me 1:1.67. Now, if I had used S1, I would have taken profit and I would not lose that trade. Okay, but it doesn't. But I went to use, I think, R2, which R3. I used R3, which was giving me 3 point something, about 1:3. Okay, so we don't win all the trades anyway, so it doesn't even matter. You don't win all the trades, so no wahala. Okay, so look at this Organa is calling. So I think we can take a buy on gold right now. 5 minutes. 5 minutes buy on gold. So at least that's live trading for us. So why are we taking it, guys? Because we have divergence. Look at it, D. Okay, and it has not moved too far away from our entry. That's why I say, because this is our entry actually, this candle here. So it's already in profit, but it's good. So where do we put our stop loss? Our stop loss is going to be just below this low, which was the low from our entry. Okay, but now we are entering here, so let's see how wide our stop loss will be. And it's good though. So wow, this is quite wide, but it's okay. Let's see, do we have potential? Can it deliver 1:1.38? I don't think it's a bad one, but taking into account that gold is bullish, I can even take the risk of going all the way to R3, and it's going to give me us 2.43. Okay, but if you are going to take this gold, because market, as I mean, we are entering how many, this almost 30 minutes after it asks us to enter. Maybe if we have entered when I saw it earlier, that would have we would be in profit now. So, but if we are entering now, reduce your stop loss significantly. Okay, reduce your stop loss significantly. Reduce your stop loss, because this is like this stop loss is like how many pips now? This like what's the pips? What's the pip going to be like? I think this is almost like 40 something pips. So that's quite a lot. If you have entered the trade, type 2, let me know. If you have entered, type 2, let me know. And put your entry. Type your entry price in the chat box. Let me see. So we are gonna take this, we are gonna hold it. Our stop loss is quite wide, but it's okay. If you have entered, I'm sure that some of you would already be showing profit now. We are just gonna hold that, then we are gonna see how that goes. Okay, you got in 3294.8. Yes, that's 3294.8. Okay, that's okay. So our average entry will already be around 92. So 92, 32 rather. Around 32.94 area. Okay. So yeah, so we're just gonna hold that. So our pullback is very weak right now, but our volume is in our favor. Okay. So don't forget we are trading divergence. Okay. So I will this 5 minutes. I want to see a shift. Yes, 15 minutes. 15 minutes showing there should be a shift. On 15 minutes, we're already seeing a shift of the pullback from very weak to weak, and probably it's going to move on to strong. Let's see what 30 minutes is saying. 30 minutes already showing a move from okay. In fact, 30 minutes is 30 minutes is giving us this entry. Okay, so 30 minutes giving us this. So let's wait and see how this pan out. 1 hour is showing us pulling back, but the pullback is already losing strength. So I think this trade is going to go in our favor. Don't worry. See, 1 hour bullish pullback on 1 hour. The pullback is losing strength. The bearish pullback is losing strength. From very weak is moving to strong. 4 hours. 4 hours. Market is bullish, very strong. So I think they should really play out for us. So just hold on to trade, don't panic. That's the market, it will do its thing. Yes, we entered in a bit late, but I think it is still gonna play out for us. I expect it will still play out for us. So just put in your stop loss, don't over risk, don't over leverage, reduce your stop loss significantly. Then your take profit stop loss from this trade is around 3280.1. I'm going to put it in the chat box. Stop loss AUD USD. Oh, sorry. How do I do this? AUD USD. Buy by market. That's around 3.329,400. Stop loss will be 32801 area. Let us see 800. Take profits. Take profit 1 will be around TP1. Three, 2, 3, 0, 600, somewhere around there. No, sorry. 700. Then TP2. 3320. Okay. So I just posted the parameter for this trade on the chat box. Everything on there, so you can see it in the chat box. Okay. So you can copy, someone can copy for us and put in the, what do you call it? Put on the group. Let's call
No,
this.
it's not on the chat group, bro. Is it in the
No,
chat?
no, I posted it in the chat, as in our this Zoom
In the
chat.
group?
Yeah, this
Okay.
Zoom chat.
No, it's not here. This chat, this Zoom chat, right?
Yes, this Zoom chat.
It's
It's
not
not.
there.
It's not here.
I think I'm sending it to someone. Hey, Jesus.
It's not there.
Who is Yano Dairo? I'm sending it to her alone. She carry grace. Oh.
Abio.
Okay,
Okay,
should be
thank
there now.
you. Three 307.
Okay, so we see how that plays out. Don't. That's let's see how that plays out. Okay, so anyway, any question? Any question? Any question?
Does anyone have a question? If you have a question, go
The
on.
divergence is very, very, very simple. I mean, I want to believe for every one of us. Divergence is very simple because you don't have to do anything. Just once you see the D. And by the way, the what do you call it? The higher time frame you find the divergence, the stronger it is. So if you find it on 15, the one you find on 15 minutes will be stronger than the one on 5 minutes. The one you find on 30 minutes will be stronger than the one you find on 15 minutes. For example, this 30 minutes divergence here, did so well for the one you find on 1 hour will be stronger than the one you find on 15 minutes. Then the one you find on 4 hours will be stronger than the one you find on. The only thing is that when you find it on the lower time frame, when they show up on the lower time frame, you find on lower time frame, it's going to give you early entries, because by the time you find it on 15 minutes, by the time it's showing up on 1 hour, you would have been in the trade already on 15 minutes, and do you understand? But the higher time frame it shows up, the stronger the confirmation. I don't know if you understand what I just explained.
100%.
Yeah. Okay, guys. So that's it. Let's see how it goes. So at the end of the day, let me know how your trade goes. Let me know whether for you it win. And then, by the way, don't be like me when your trade is moving to your first take profit, or when you hit your take profit break even, or when you think you are in a good profit break even and things like that. Manage your trade. That's what I'm trying to say. Manage your trade. Okay, so I think that should be taken care of. Okay, guys, I think I've covered the grounds we need to cover today.
Yes, indeed you have. In fact, you've more than covered it. You've more than covered it. You've done justice to this. And I just want to thank you so very much, my dear brother. Thank you so much You've given us a lot of value here. You know, I mean, this is a recording, this is a session that people can just play over and over again and just take the strategy. Amazing. I'm super excited. Thank you for creating time out of no time to do this. As I round up, before we shoot off this call, can I ask, does anyone have a question? If you have a question, please type it out or unmute yourself right now and throw the question at our trainer before he jumps off this call. Okay. I think it's it's pretty straightforward. You really knocked it. Thank you so much, Ayola Dimeji. God bless you.
Can
You
I ask a
know,
question?
I don't want to. Okay, Desmond,
Oh,
throw
thank
your
you.
question out there, please.
All right, Mr. Ayo, thank you very much. This is quite captivating. It has really boosted my confidence more to pick trade on Sniper Pro. But I want to ask quickly, you've given us where those 3, 4, 5 points are considered, and then also where divergence appears, and then it looks as if considering those 3, 4, 5 points, and then divergence on its own, which would you rather prefer as a stronger confirmation before one enters the trade? I don't know if my questions are clear.
Okay, I think they are. Okay, so like I said, that I did mention that these two are different. They are different strategies. Okay, they are different strategies. In fact, you cannot use them together. You know why? Or let me rephrase that. There are circumstances where you cannot use them together, and there are circumstances where you can use them together. So if you have a circumstance where the two strategies agree, that solidifies your entry. I mean, that this trade, it increases the probability. Let's look, for example, look at this example. This is a divergence call right here now. It's saying, what do you call it? Buy and sell. And it has sold. But as per this Bollinger Band strategy we talked about, are we going to sell? No, because it has not touched our Bollinger Band levels. So we'll never have sold this trade. You know that. Sure, you know that.
Yes.
Using
Yes,
that Bollinger
because
Band,
we
we'll
didn't
never have
test
sold it.
them.
Exactly.
But the divergence now say sell.
And it's sold.
And it's sold. So it's a good one for us when we have these two different strategy in the same scanner, in the same tool. Meaning that even though I am not a proponent of enter too many trades, it's not good to enter too many trades. Do you understand? Because it can make you overtrade. But the thing is that it helps you to maximize opportunities and potentials in the market. So it's going to be, and you know why it's going to be rare for you to find a scenario where divergence and the Bollinger Band strategy will be together. Is because most of the time, it's because most of the time, guys, when divergence is peaking, is low or is high, it's most likely going to happen outside the requirement of the Bollinger Band strategy, the conditions. So let's look at another example of what I'm trying to say. I want to look at, let me see if we see a divergence here that okay, I'm not seeing divergence. Let's go to 30 minutes. Okay. Oh, okay. I think this is a perfect example of what I wanted to say. So look at this example. Look, can you see divergence here, right? Look at divergence here. I hope that Desmond is still with us. Oh my God.
Yes, I'm here. Yes, I'm here.
Okay, good. So look at this divergence. This is one divergence that agreed, that where the two of them came to
Like
agree
a
to.
confluence.
Yeah, a confluence. Thank you, ma. That's the word. Can you see? It touched, Abby.
Ball appear.
Yes,
Yeah,
it did.
it touched, and ball appeared. The only thing is that divergence would have said, with divergence we would have entered earlier, but eventually the ball appeared also here and would have also entered it. So for me, this is like a typical agreement where the two of them agree together. So that's the confluence. So it makes it like you can, if your confidence level about the trade was, let's say, 60% before, where the two of them now agree, it has to shoot up to 80%. Okay, so as per which one would I uh choose? For me, it's good. I would trade any of the two that I find, especially as long as my trend counter is saying take the trade. For me, this is the ultimate. This trend counter is the ultimate. And I keep telling you, your ability to understand this trend counter is your, is your, what do you call it? Is the power of this strategy, is what makes you, win a lot using this strategy. Does that answer your question, Desmond?
Yes, perfectly. Thank you. Thank you.
Is there anyone here who does not understand the counter? If you don't understand, let me know. You don't understand. You are looking at the counter right now. You are saying, I don't know how to interpret this thing. Oh, anyone?
Okay, just do me that favor. Use what is on the screen now. I can see in 30 minutes bullish, pullback, neutral. Don't use that to explain the counter for me on the final note, please.
Okay. So right now, this is gold we took, right? So, well, we're on 30 minutes. So don't forget that for the counter, it's not just, you don't analyze the counter just on a single time, what do you call it? A single time frame. Okay. So when you open your your typical trading day, you open a currency pair, okay, and this, what you want to do is to check higher time frame. What's the higher time frame saying? Oh, bullish trend is very strong. What's this 4 hours saying? Bullish, very strong.
Trending, very strong. Yeah.
1 hour, okay, 1 hour is saying we're having a pullback.
Pullback,
Okay.
but the bullish trend is still strong.
Yeah, but the trend, the bullish trend is still strong. Okay, so
Yeah.
that looks like something that wants to buy to me. But look at the volume on 1 hour. There's a shift 96 to 48. But don't forget, the volume is telling you what's happening. The volume of trades in the market right now, we are having more sellers than buyers. But don't forget that you can you you need to understand the best time to get into a trade. It's not when the volume has plateaued. Okay.
Okay.
You also want to see, because now, right now, we are what do you call it? The volume is in favor of the sellers, but when the market wants to and we are in a pullback, right? So how do you know when the market
Yes.
wants to start continue the trend? By buying. So by the time you start seeing, for you to see that shift, you will see a movement from very weak. It will
Come
start
back
moving
later.
from weak until it gets to very strong. By the time it gets to very strong, and there's a confirmation that the pullback has been exhausted, this also will change from pulling back to trending. Do you get my point?
Yes.
So, but right now on 1 hour, it's showing that it's pulled back, but the buy is the what do you call it? The bulls are very strong. The bulls are still strong, okay? Now, 30 minutes, pull back, neutral. And you can see that the volume on 30 minutes has shifted again, not like 1 hour. I don't know. I'm coming. I'll check for you soon. No? I'll soon finish. Okay, so now we come to 15 minutes. Don't forget that our entry frames are we stay with 15 minutes and 5 minutes. You can draw that time frame, okay? But I believe 15 minutes, 5 minutes will give us good entries into the market, okay? So now can you see it has moved from weak to neutral? When you begin to see this movement, guy, I don't know if you saw that it was on week when I clicked 15 minutes.
Yeah, I saw it. Yeah.
It has now moved to neutral.
Yes, sir.
By the time it is a signal to you that is buying. So if it goes to strong, by the time it gets to very strong, pull back will change to trending. And by that time, this trade would have gone.
Wow.
Mm.
Okay.
So you cannot wait for it to start showing you trending, very strong trending before you get into the trade. Because by that time, maybe we would have even already take profit one.
Okay.
So that's why you need to be able to learn how to interpret what's happening here. It's on pullback, it's very weak. So, okay, now good. Thank you for asking this question. So if it is, when I see that prices are this lower Bollinger Band, and I see that my oscillator, okay, good. You see, you can see that this oscillator went below the retest, Abi, almost getting to the reversal box, Abi.
Yeah, for bullish, right?
Good.
Bullish reversal, yeah.
For bullish reversal. Now, when it got here, you would have been seen pulling back very weak.
Yeah.
So whenever I see the price has got to what do you call it? I touch my Bollinger Band there, okay, and it has touched my retest level. From that point, I begin to pay attention to what is happening here. I begin to pay attention to what is happening here because I know that 1, 2 condition has been met.
Yeah.
I begin to pay attention. Okay, what's happening here? This one is telling me bullish. This one is telling me pulling back. It's telling me very weak. So I begin to pay attention. I need to see a shift. I need to see the trend and the volume in the market shifting from the sellers who are creating the pullback, and the sell-off has ended, and it is now moving from very weak to neutral. Do you understand?
It has gone back to weak again. Okay, it has
And
gone back
yes,
to neutral.
like I told you, it is a real-time. What you are seeing here is a real-time activity of what's happening in the market.
Okay.
Do you understand? But why are we confident that this is going to buy? I mean, the buy is going to play out, or as high probability, because there's no 100% assurance that in the forex market, is because of what we have seen on the higher time frame, daily, 4 hour, 1 hour, maybe 30 minutes. What are they telling us? They are telling us a story. Look at 30 minutes now. 30 minutes are already giving us a ball. It has already touched. So we're expecting it to go up. Okay. And 30 minutes we are seeing is on neutral. The only reason is that you can see that why is it neutral? Look at volume. The volume are very close to each other.
Yeah.
But
Yeah.
this one is already showing us that there is tendency that the price may go up. 30 minutes is showing us that. Let's see 1 hour. What's 1 hour saying? 1 hour 2 has got to, okay, 1 hour has not got here, but 1 hour has got to 200 moving average. It has not got here yet. So whenever I see a scenario where 1 hour has got to retest level, it has got to Bollinger Band, the same thing has happened on 30 minutes, the same thing is happening on 15 minutes. Then those kind of trade are almost certain that you are going to win it.
Okay, I have this question, please. It might be funny. Please don't take it funny. What is on the screen now is on 15 minutes. I can say bullish, pullback, neutral.
Sorry,
Yeah.
sorry, Desmond, sorry, I have to interrupt you. AY, can you please stop the recording? Otherwise, it will be too long. We can stay on this call. Please stop the recording. Thank you very much.
Okay.